PhonePe, the leader in India's digital payments revolution. India's digital payments arena is experiencing an unprecedented power shift. PhonePe now commands nearly half the entire market. This isn't just growth, it's total dominance reshaping how a nation transacts. As of June 2025, PhonePe holds an extraordinary 47.2% share of all UPI transactions in India. That means roughly 1 out of every 2 digital payments flows through their platform. But here's where it gets controversial. Can any single player hold such overwhelming control without stifling innovation? Let's unpack the numbers driving this dominance. PhonePe processed a jaw-dropping 8.54 billion transactions in just 1 month, June 2025. To visualize that tsunami of activity, imagine every person in India conducting over 6 PhonePe transactions monthly. That volume translated to 11.98 Indian rupees lakh crore changing hands, equivalent to the GDP of a small nation. 3 pillars explain this meteoric rise. First comes frictionless design. Unlike older systems that frustrate users, PhonePe's intuitive interface feels like a friendly assistant rather than a banking tool. Combine that with industry-leading transaction success rates, and you've removed the #1 barrier to digital adoption: reliability anxiety. Second is ecosystem integration. PhonePe transformed from a payment app into a financial Swiss Army knife. Need to pay electricity bills? Buy insurance? Invest in mutual funds? Scan a merchant's QR code? All seamlessly integrated. This one-stop-shop approach eliminated app hopping, a genius retention strategy that turned casual users into daily devotees. Third is the turbocharged expansion playbook. While competitors clustered in metros, PhonePe deployed an aggressive merchant acquisition army. Result? Over 18 million merchants, from Mumbai high-rises to Bihar village shops, now display those ubiquitous yellow QR codes. Their secret weapon? Hyperlocal rewards like 50 Indian rupees off at this Kirana store that turned users into unpaid evangelists. Now, the plot thickens. Google Pay trails at 36.1% market share, still massive but clearly playing catch-up. Paytm clings to 7% amidst ferocious pressure from newcomers like Navi and Super.Money. This creates a duopoly where PhonePe and Google Pay collectively control 83.3% of transactions. Is such concentration healthy for India's fintech revolution? Critics argue it risks becoming a two-horse race where smaller innovators get trampled. The true game changer? PhonePe's rural penetration. 90% of Indian merchants now accept it, not just urban giants but village vegetable stalls and roadside chai shops. This democratization of digital payments is perhaps their most significant achievement, turning PhonePe accepted here into the new accepts cash. So where do we go from here? PhonePe's AI-driven fraud prevention and voice-assisted transactions hint at an even smarter future. But the elephant in the room remains: can competitors disrupt this juggernaut? And at what point does market dominance become anti-competitive? We'd love to hear your take. Do you see this consolidation as innovation's triumph or a threat to consumer choice? Drop your perspective in the comments. UPI versus IMPS, will India's digital payments shift abandon immediate payment service? The evolution of IMPS amidst the UPI payment revolution. In the rapidly changing landscape of digital payments, a striking statistic stands out: 18 billion transactions for UPI compared to a mere 500 million for IMPS. This stark contrast raises a pivotal question: should banks continue to invest in the immediate payment service, IMPS, or is it time to phase it out in favor of the more dominant unified payments interface, UPI? As UPI cements its position as the frontrunner in the digital payments arena, IMPS finds itself in a precarious situation, witnessing a significant decline in its share of India's digital payment market. But here's where it gets controversial: IMPS was once a revolutionary service that transformed how we conduct transactions, offering instant payments around the clock. However, with UPI's user-friendly interface and widespread adoption, many are left wondering if IMPS can still hold its ground or if it is destined for obsolescence. To understand this shift, it's essential to recognize the unique features that IMPS offers. For instance, IMPS allows for real-time fund transfers between bank accounts, which is crucial for certain transactions. Yet, UPI has taken this concept further by integrating various payment methods and enabling seamless transactions through mobile applications, making it more appealing to the average consumer. As we delve deeper into this topic, it's important to consider the implications of this transition. Will IMPS adapt to the changing demands of users, or will it fade into the background as UPI continues to thrive? This question is not just about technology, it's about the future of banking and how we manage our finances in an increasingly digital world. So, what do you think? Is IMPS still relevant in today's payment ecosystem, or is it time for banks to let it go? Share your thoughts in the comments below, and let's spark a discussion on the future of digital payments in India.